President Trump's shocking move to replace Fed Chair Jerome Powell early has sent shockwaves through global markets. The dollar is in free fall, suffering its worst quarterly drop in over a decade, down 10.3% this year. Wall Street is scrambling, but China sees an opportunity. Beijing is aggressively dismantling the dollar's global dominance, dumping U.S. treasuries, launching gold-backed Yuan contracts, and rewriting the rules of international finance. The chaos started when Trump signaled plans to oust Powell months before his term ends in 2026. Markets went haywire, betting on emergency rate cuts despite stubbornly high inflation. The dollar index plummeted 8% in just 2 days, its sharpest decline in years. Morgan Stanley warns another 5 to 7% drop could happen if Powell is pushed out prematurely. Foreign investors are fleeing U.S. debt, dumping $194 billion in treasuries since January, the biggest sell-off since 2015. China is capitalizing on the dollar's weakness. It has slashed its U.S. debt holdings to just $775 billion, a 14-year low, while quietly rolling out yuan-based alternatives. The Shanghai Gold Exchange just opened a massive new vault in Hong Kong, processing $10.5 billion in gold trades in its first month alone. Unlike London's paper gold system, China's contracts are settled in physical gold, priced in yuan, and open to foreign investors. This is a direct challenge to the dollar's role as the world's reserve currency. The U.S. economy is feeling the pain. Inflation is squeezing consumers. Walmart raised prices on over 1,200 items last quarter, blaming Trump's tariffs. Real wages fell 0.5% in May, even as grocery prices surged 8.7%. Meanwhile, Treasury auctions are failing, with Japan cutting purchases by $38 billion. The dollar's share of global reserves has collapsed to 58.3%, the lowest since the euro launched. China isn't just watching, it's executing a master plan. It signed a 100 billion yuan swap deal with Indonesia, allowing trade in LNG and coal to bypass the dollar entirely. Its cross-border interbank payment system processed 3.6 trillion yuan last quarter, up 21% year-over-year. And 23 central banks now hold yuan reserves, a 72% increase in 5 years. The final piece? Gold. China, the world's top gold producer and consumer, is building a parallel financial system anchored in precious metals. Its new Hong Kong vault cleared $2.3 billion in trades within 48 hours. Analysts warn that if this trend continues, London's gold market could lose its dominance within 5 years. The dollar isn't dead yet, but the foundation is cracking. The Fed's credibility is at risk, Treasury demand is fading, and China is offering the world an alternative. The question isn't if the dollar's dominance will end, it's when. What do you think? Is this the beginning of the end for the dollar? Drop your thoughts in the comments below. Don't forget to like, subscribe, and hit the bell for more deep dives into the financial wars reshaping our world.